So welcome. Today I have Ron Bernbaum in. Ron, you're founder and I guess CEO of PearTree.
I am.
Fantastic.
Hi, nice to be here. Thank you for having me.
Well, thank you very, very much for coming in. It's a pleasure and an honor to speak to you today. So let's start here. So why don't we give our listeners a little bit of background on Ron? How did you make your way into this? You mentioned before we turned this on that you were a lawyer.
I do have a law degree. I was called to the bar. Oh my goodness, 1979. Were you born in 1979? No, I don't think so.
No, 85.
Yeah. So I've been around the philanthropic community all my life. My wife and I have been active in charity. 2000 and I've been a tax lawyer for most of my life. In 2006, the law changed thanks to a guy named Don Johnson to eliminate capital gains tax on the donation of publicly listed securities. And at that time, there was a small little article written by PwC that said, gee, if you buy a flow-through share for $1, your tax base or your adjusted cost base for tax purposes, it's as if you paid nothing because you get to write off $1. So if you eliminate the capital gain and you can buy something for $1, write off $1, and then donate it, you don't have to give it away, it's your share. But if you go donate it and the charity gives you a receipt for $1, you should have $2 of deduction for one check. And that's and so the cost of giving should be like nothing. And I knew nothing about flow-through shares. Tax is a hobby. So I reached out to one guy by the name of Jean-Pierre Collin, an old-timer who had been in the flow-through shares space for a long time. And he said, well, there's 4-month holds. You have to pay a premium. You'd have to sell at a discount. Somebody has to inherit that 4-month hold. But at the end of the day, starting in 2006, Rob McKnight, a very good tax lawyer, myself, went to the CRA. And in 2000, at the end of 2007, the tax authority signed off on a format that said you could buy a flow-through share for $1, donate it to charity, get a donation receipt for whatever the charity got, and then you'd have 2 deductions for one check out of pocket. And that was the beginning of the charity flow-through space. That said, the benefit to the mining industry is as great as the one to the philanthropic community. In the philanthropic community, the cost of giving goes from, say, 50 cents on the dollar if you're writing a check, down to maybe 10 cents in Ontario and even less in Quebec, where they really understand tax policy, and with the additional tax credits. In Quebec, the cost of giving, if you have enough income to use up the deductions and credits, is like 2 cents on the dollar. But for the mining industry, where we could buy at a premium and sell at a discount, we buy high, strip out the tax value, and the same day sell below market, then the real negotiations between the issuer who wants a higher price and the end buyer who wants a lower price. But because we've separated the tax value from the underlying equity, that means that equity could be sold anywhere in the world. And so our byline is expanding the universe of exploration capital, and probably in every year, certainly well over 90% of all the shares that we place with end buyers alongside the banking community are sold to non-Canadians.
Wow! And would you say that a lot of the sort of the charity funds that comes through the door at PearTree are earmarked for the mining space? Like what proportion of
it's all mining.
It's all mining.
So up until a couple of years ago, you could also finance oil and gas.
Right.
But the Liberal government has changed that, so you can no longer finance oil and gas using flow-through shares.
And how has that impacted the oil and gas space?
Probably not very much, I don't think.
Okay.
I think they've moved on from this. I mean, they weren't relying on the flow-through regime in any event for a long time. Part of the issue is that technology in the oil and gas space eliminated exploration risk. So the view of the tax authority was it was no longer a deduction in 1 year. You had to write it off over time. And so they they moved the flow-through regime for oil and gas exploration for something you could put up $1 and write off $1 to something where you'd put up $1 and could only write off a third, more or less. And then you'd have to amortize that expense. And so that took the wind out of the sails a long time ago. And so it just hasn't been much. It has not really been much of a negative impact in the oil and gas space. That said, we were successful in assisting folks in Calgary in lobbying for an expansion of the flow-through regime, which came in this year, where you could finance the exploration for lithium through the exploration of brine, which is very much a drilling program, and that is fully deductible with a credit.
Okay. Now, do you guys, I guess, so looking at the overall sort of flow through the amount of money kind of rolling through PearTree, I don't know if this is public knowledge or not. What would you say sort of top line average comes through the door at PearTree annually through mining? Like, how much money is really, or do we see in the charitable flow space trickling into the mining sector?
So we're probably 70 to 75% of the charity flows through space. So this will be the third year in a row where we've done over $500 million. Like we're at 62 deals currently at about $500 million a year.
That's crazy. That's a lot.
Yeah, it's crazy. And it's also $500 million of shares that are first bought by those who are interested in giving them away. I mean, the hospital sector across the country is the biggest benefactor.
Oh, is that right?
Followed by schools. So we don't pick the charities. We're just an enabler. So we buy at a premium. The shares are donated the same day under a deed of gift. The shares are then immediately sold to an end buyer at a discount.
Right.
And what the tax authority really likes is there's real, as I mentioned earlier, there's tension. The issuer wants a higher premium. The end buyer wants a bigger discount. And so quite often, especially in Quebec, where the spreads between the buy and the seller are significant because of the additional tax credits, an issuer can raise money at that's where the shares are trading at, say, $1. They can raise money at $1.50 and sell at 80 cents.
Right.
Right, after the donation has separated the underlying equity from the tax value.
Yeah, it's tremendous. It's a tremendous amount of money for an issuer to raise at minimizing dilution, maximizing the amount of capital that they have to spend. And certainly in this side or in this sector, it's a spend money business a lot of times for these explorers.
Oh, forever.
Forever until they're a producer. But it really floats a lot of boats to be able to take in that amount of capital. And most issuers, by and large, spend the bulk of their money in the ground anyway. So it's
well, they have to under the flow-through regime. I mean, one of the things that the international community likes about the flow-through regime is that it's a relatively short list of expenditures, and it's largely on-site, and it's labor. It's getting folks out in the middle of nowhere drilling holes into the ground. I mean, it's labor and diesel and food and beer, maybe not in that order, but.
Well, I made I don't know the top line numbers, and it's helpful to talk about them, like vis-a-vis 500 million to $1 billion, let's say, on average.
I think the flow-through regime in total is about 75% of all equity raised for exploration in Canada, and of that, again, about 75% of that is through the charity flow-through.
The charity side. Yeah.
So in any 1 year, PearTree will be 40% of the whole market. Maybe as much as 50 if there's an erosion.
Now, it's helped to keep our sector competitive, and it's helped to fuel junior exploration and keep it vibrant and keep it competitive on the international stage.
Oh, it's a remarkable enabler. This is the only jurisdiction in the world that has a flow-through regime.
That's what I was going to ask you.
Australia's tried it a bit. Interestingly, we are doing flow-through offerings for Canadian subscribers, for PearTree subscribers, on the Australian exchange. So Australian issuers will raise money. I'm thinking maybe Patriot or Sayona, I forget which of the two, but that's both lithium in Quebec.
Yep.
Earlier this year, we did $50 million with each, first quarter of 2023. And I think both those cases, it was an Australian issuer. Our clients subscribed for the shares in Australia, then donated to Canadian charities, and the end buyers all in Australia. Australians like lithium in Canada, especially in Quebec.
Yeah, absolutely. Now, there's been some changes. So I had Jason Levinson on a few months ago. He's a friend of mine, and I was mentioning before we started recording that Jason's a hustler. He raises money for a lot of the traditional flow through funds, etc. And so he kind of raised some awareness with me that there was changes coming down the pipe on the charitable flow, vis-a-vis the ability to, like you say, double dip almost, or I don't know if you use, I'll use that term, sort of double dip on the deduction to some degree. What's going on there?
It's
confusing to me.
Yeah, it has nothing to do with the charity flow-through regime.
Okay.
It's a broader application under something called alternative minimum tax, or otherwise known as AMT. So this is a rule that came in 1987, in which every Canadian taxpayer is obliged to just complete their income tax return, their personal income tax return, their T1 return, and then also have an alternative return prepared. It's all done, with computers now and tax prep. It's easy enough, which backs out or adds back into income certain deductions and credits, things like carrying costs and capital gains, with the view by government that you're entitled to those deductions and credits, but you can't drive your income to nil. So if you make $1 million a year under the rules, or $200,000 a year, doesn't matter. But on $1 million of income, you're going to pay the government under current rules about $250, no matter how many deductions. If you bought $1 million of flow through, you would think you could drive your taxable income to zero and not pay any tax.
Fair enough.
So AMT simply says government has cash flow needs, and so you're going to pay a minimum. And to the extent that under the normal rules your tax owing is say $100,000, and under the AMT calculations $120,000, you would simply carry forward that $20,000 to be used against a year when you haven't got as many deductions. And after 7 years, they expire, so you better use them up in 7 years. In this year's budget, 2023, effective beginning of 24, that's in the spring budget, the federal government brought in changes the AMT. It's very nuanced. It's very tailored. It's not obvious unless you push through the returns. But the examples are they've effectively increased the capital gains inclusion rate from 50 to 62%. And nobody's yelling. TSX isn't yelling. I don't know any industry group that has taken them to task. Mm-hmm. The charity community is now actively lobbying, as I think the mining industry as well. But mining industry has been slower. We know we have a full-time GR, Vice President Alana Clark, who's been busy helping people write letters, and for every donor letter or for every 20 donor letters, there's only one out of the mining industry, and the mining industry will be bad. The exploration industry certainly will be hurt by this.
Yeah, this is sort of baffling to me because it's like, we have associations in the mining universe like the PDAC,
right?
And it was brought to my attention. It's like I think the PDAC collects something on the order. I forget what they collect annually. I think they've got a treasury of about 40 million, something like that, at any given time. I think it's fairly sizable. And the role of the PDAC would be to look out for the interests of junior mining as a whole. And do you find it difficult, as you're mentioning, such a small group of companies like yours are involved on this charity end, being responsible to lobby against certain things like this? Is it sort of frustrating to look across the aisle and see a lack of support from groups like PDAC? Do they support something like that? Would that be a group that would be involved in helping to lobby this? Is that
they are lobbying?
Okay.
No, they're actively lobbying. There have been submissions made, budget, post-budget submissions, pre-budget submissions, other things. PDAC has been active. AME in BC is active. The folks in Quebec are as well. So I think, in fairness, the PDAC is active on the file.
Good.
The security side of the business in our firm is run by Lisa Davis. She spent 2 full terms on the PDAC board, like 6 years, of which I think 5 of those 6 she co-chaired Finance and Taxation Committee. Mm-hmm. So we've got good collaborative insight into what PDAC is doing, and everybody is alerting government. I'm not sure that this government is prepared to listen. I think their view is tax the rich. Sounds great. Even if they're giving away money, even if they're helping the economy, it's part of a very doctrinaire approach to tax policy, not supported by evidence.
Yeah, it's bizarre, and I know that charities as a whole were in the crosshairs of this government for a while, or at least the opposing side of the aisle, vis-a-vis auditing such institutions, industries, etc. And that was kind of kiboshed by Trudeau, saying, "Hey, listen, like we got better things for our auditors to do than to dive any deeper on the charities and the use of funds here."
I think the when you look at the those who are active in the charity community, like the Association of Gift Planners or Imagine Canada.
Yeah.
Imagine Canada has a very good letter addressed to government. If you log on to the Imagine Canada site, they estimate in one study that it'll be an erosion of at least $500 million, on another one $1.5 billion. I mean, these are that the charities will take in less. On the mining side, maybe the best example might be what's going on in critical minerals. and sort of the concentration. The federal government will say that the AMT rules only affect 25,000 individuals in Canada. And in fact, they've raised the limit, so no one's affected unless you're making $173,000 a year. Now, the critical mineral exploration tax credit that was introduced in April 2022 resulted in $350 million of accretive exploration in the 12 months following the introduction of the credit. Tax credits work. Right? Of that 350, so I can't speak of the balance, but 225 was done by PearTree. So
and what was that? And what was that bump? It was something like to the tune of like 1.3 turns to 1.6 or something like that as a premium.
They basically the bump was that they provided a 30% tax credit, which gave issuers the ability to negotiate more of a premium to market. And in some instances, it went from 1.3 to 1.6. Say so. If a share is trading at $1, if an issuer could have otherwise gotten $1.30, can they now get $1.60? And I think that's probably order of magnitude, probably directionally at least, that's pretty accurate. But the point is that in our case, the average subscription was $239,000. And a PearTree subscriber had to have approximately $800,000 of income to fully use all the deductions and credits when buying that $239,000. 1,100 subscribers funded $25 million. Otherwise stated, 1,100 people, all constrained by AMT, funded 64% of all critical minerals in the country over that 12-month period. The same 1,100 people, they're still our clients, would now require 1.5 times more income to subscribe for that amount of capital. And otherwise stated, the person who was buying $239,000 will now only be able to buy about $159,000. So the junior exploration space is bound to decimated is too strong a word, but a significant reduction by as much as a third is probably anticipated. All other factors being equal. In other
Could be
words,
up to half. Yeah.
It's especially during tough times, right? I mean, the markets are extraordinarily volatile and quiet right now. There isn't a lot of back-end buying, a lot of global buying, whether it's lithium or gold. There isn't a lot of confidence in the space. No. And so this approach is a great benefit to the economy, especially when times are down, and taking the wind out of the sails by adding back in an alternative minimum tax calculation bound to reduce the amount of capital available is just bad policy. It's just bad.
And so if I'm an issuer out there listening to this, and I want to come to PearTree, I'm interested. I have an issuer I'm exploring, let's say in Ontario or anywhere, let's say, in the country, and I'm interested in a charity deal. What sort of back-end check size is sort of like the bare minimum to go down that path? Is that a thing?
Yeah, it's all about relationships. We'll have a fund manager call and say, I'm investing $500,000 into this issuer. It's you're going to end up with a $750,000, $800,000 issue. We'll do that deal.
Sure. Okay.
The biggest deal we've ever done was for OSK for Cisco was $70 million, 70. Yep. And OSK has been probably our biggest supporter in the marketplace. Great. I mean, the Cisco guys they teach the master class in how to get things done.
Yep.
So it's a matter of finding that end buyer, that whether it's a strategic investor or other investors anywhere in the world. A lot of what we're seeing now, at least we have in the last year, is family offices. I think have especially on the critical mineral space, have been purchasing pretty aggressively. The Australians have been responsible for a lot of the back end investing, and Australian money is a lot more sticky than Canadian. Issuers generally tell us that they like the issuances on the Australian exchange over the TSX venture.
Yeah, it's interesting. I know the Australian exchange has some advantages, I think, in terms of visibility and disclosure. I've heard it said a lot, and I know we've seen it. When you look at an Australian issuer, for instance, their daily trade activity is all above board. You see who owns your shares, who's buying, who's selling. Everything like that is above board. There's no such thing as like anonymous
And there's
trading in that.
And there's no 4-month hold either.
There's no 4-month hold either. Yeah, that's a big one. And so, do you see any other issues in the? So this is a big one coming down the pipe as far as the amount of money. Now, is there overlap in the? Would there be any tangential effects that this will have on traditional flow participation?
Well, probably to a lesser extent, rather. By the way, the legislation that was introduced in the spring budget has not yet passed.
Right.
So we're inviting everyone, and we have precedent letters on our website, or you can contact a line in our office if you need some help specifically, especially in the northern communities. Right. The more people write in, the more people talk to their politicians. Especially in those ridings where they're the swing ridings where the current government got in by very few votes, right? This is an important issue, especially in the north. So if you can still write in, still contact your member of parliament, especially for an issue where this says, I thought I was going to get a deal done this year. It's no back end buying for next year, though. I'm being told, if I have a $10 million budget, I'm probably only going to get to 6, and that's a differential of 4 million of jobs in the north. So tangentially, I think the same set of rules are just when you look at capital gains tax. I mean, people will finally wake up and go, "What do you mean I'm being taxed at 62%?"
Yeah.
All right. The bigger capital gains. The bigger capital gains are often once in a lifetime exit or a go public or a whatever. I mean, it's you have income one year, there's a blip, and then never again.
Yeah.
You sold the property.
One big windfall, and then after that, there's a lot of dart throwing, but never a ton of big wins. Yeah.
So maybe I can crystallize this a little bit more. Under the current rules, and this makes sense, if I lost $1 million in the market last year, 2023, so I had a capital loss last year of $1 million and a capital gain in 2022 and a capital gain in 2023 of $1 million, you would think one washes the other, and that's the end of it. I wouldn't pay tax. And under the current rules, that's exactly true. Under the revised AMT rules, if I lose $1 million in 23 and have a capital gain in 24, I can only carry forward half my loss. I'm still going to pay $125 in tax, even though I've got a loss in my books of $500,000. Mm-hmm. If that doesn't have a disincentive on individuals investing in Canada, I don't know what will.
Yeah, it's interesting. It's going to be hard to fight for those dollars as, we're seeing that, like you said, the markets are getting a lot more volatile and there's a ton of uncertainty out there. And so mechanisms like this that can stimulate venture capital and can stimulate the economy vis-a-vis tax breaks and capital investments in a lot of these projects, if it means through this charity method and getting a bit of a tax break, I mean, that's certainly very, very important. Is there anything else that could come in and take its place that we've seen in other jurisdictions?
No. The short answer is no. Yeah. It's a very, you used a very good word, venture capital. I mean, the junior mining is venture capital at its riskiest.
Yeah.
And at the end of the day, a flow-through share is nothing more than a common share and an agreement by the issuer to spend it on a short list of activities, which is largely labor.
Yep.
So a deduction in Toronto is a taxable event in Timmins. Why is anybody fussed by that? There should be an expansion of the flow-through regime to include all sorts of other expenses, but whether it's mining or northern development. But there's lots of opportunity there. I'm obviously a big fan of flow-through. I mean, I came to it late in life. It's like literally only 15, 16 years ago. But government historically, I think, I'm pontificating a little bit here. They love being hierarchical. Politicians and bureaucrats, oh, please, sir or madam, give me more. I mean, whereas the flow-through regime is like a distributed computer model. It's peer-to-peer. Mm-hmm. Here's a set of rules. Let the market decide who's going to get the money. I mean, if you think about the critical mineral exploration tax credit, 2022, a year later, $350 million was invested. If the government of Canada in the spring of 22 had set up a crown corporation and invested it with $500 million to invest, Right? A year later, they'd still be they'd still be looking for office space and figuring out their letterhead and website. They wouldn't be staffed.
No, exactly.
Right?
Yeah.
This is peer-to-peer, distributed model that allows capital capital raising. And it's not just the tax. It's just a great enabler.
It's direct. Yeah.
It's direct.
It doesn't need infrastructure. It doesn't need bureaucracy.
There's no upfront review. It's basically the CRA has 6 years to look at it. Right? It's basically if you follow the rules, the CRA is the umpire.
Yeah.
Right? So as long as you're following the rules, everybody gets what they bargained for. The folks that understand this best in the country is Quebec.
Yeah.
So,
do you think that Canadians appreciate the natural resource sector today as much as they once did? Do you think that that's in jeopardy, given that there's a health and there's a shift of money in other markets? Like Australia seems to be rather strong relative to Canada as far as junior mining and venture capital goes.
I think the critical mineral need is driving a new appreciation. Like we see this a lot in our donor subscriber base. I mean, typically they're older, like me. The kids are now involved in the business, and when we were doing financings in oil and gas, the kids would say, we really don't want to finance oil and gas, even though I own the shares for a moment in time. Right?
Oh, I don't want to be an enabler of that.
I don't want to be an enabler of oil and gas. Gold and precious metals and anything else, really the 40-year-old, the 50-year-old even, really didn't get it, didn't appreciate it the way we in the exploration industry get it. But with the drive for critical minerals, there's a sudden appreciation that you may be in love with your Tesla, but the stuff that goes into that Tesla has to come out of the ground. And I think that appreciation and that understanding now is actually driving a renaissance in an understanding of just how important the resource sector is to Canada and the world generally. So
sort of the altruistic narrative of climate, the overall health, environment, green energy, etc. Package that up, critical metals, that resonates a little bit more with the charities to be more open to playing a role, at least even momentarily.
Not so much the charities, but the subscribers. The charities are generally indifferent. I mean, some aren't, but
they're benefactors.
They're benefactors there, but so they're generally it's rare for charity not to have accepted any share that was being donated to them. But for the subscribing, those who can write a check, I think we're finding that there's a greater appreciation for the mining industry. And, unfortunately, so many people think that mining isn't environmentally sensitive, but the new breed of mining certainly is.
Absolutely it is. I think it goes beyond that. I think it's not just environmentally conscious. I think it's also socially conscious. And so when you hear about things like ESG and trickling out ESG plans, I mean, one of the interesting things about a mine is you can't move a mine. Right? So you have to get along with your neighbors. You have to get along with your community. You have to engage with them. You have to figure it out. Like if the mine is where the mine is, if the deposit is where the deposit is. So I think the mining industry has been on the cutting edge of trying to reach out and integrate views and opinions of all stakeholders, both domestic, labor force, locale, community, everything for a long time. In fact, I think it'd be really awfully difficult to measure. I know we see these ESG scores and things like this that are attributed to various things. And if you look, a lot of the mining companies have the best ESG scores against companies like Tesla. I was looking at, this was interesting the other day. I think Tesla had an ESG score of like 38. And it's a ranking out of 100, let's say, right? And it was like Tesla had an ESG score of 38. Congratulations. You're revolutionizing the world by, making electric cars cool. Yet, here we go, ESG score of 38. And I think that has a lot to do with Tesla buying or Musk buying Twitter. But then all of a sudden you look at like Newmont's ESG score and it's like 88.
Yeah. Do you want to switch seats and I'll ask you the questions? I mean,
sure. Go ahead. Let's ask.
No, yeah. It's okay. No. What you've just said is so well set out that I have no comment to that. Other than that, yes, I'm shaking my head and I'm agreeing with you entirely. Okay. All right. There is nothing to add to what you just said. It's
Now this whole charity universe is so fascinating to me because okay, I'll ask another question. Do you think there's ever been benefactors of shares on the charity side from charities that are like actively or overtly opposed to mining? Do you think that ever happens? Let's say like, I know at World Wildlife Foundation, right? They used to, poo-poo on the uranium space quite a bit. Now they're good with it, right? Because it's, it's important. Would there have been a time where, like, say, World Wildlife would have gotten the...
Maybe.
Yeah.
But part of the issue for us is that in the philanthropic space, so we're active in two sectors, each with its own, rules, regs, governance, tax, right? One is the philanthropic sector, one is the exploration, and they're two very different worlds. Generally, most people will donate to something now referred to as a donor advised fund. It's their own foundation run by say the Toronto Foundation. Mm-hmm. So rather than setting up your own foundation, you can donate into a donor advised fund. All the banks run them as well. Bank of Nova Scotia, for example, is probably one of the probably the best known over for many years. And basically, then I take my $100,000, I donate it, whether it's shares or cash or whatever, and then I direct my donor advised fund to please make a payment of $2,000 to whatever and $10,000 over whatever. And so the charities themselves won't necessarily see the source of those funds once they've come through a foundation. Mm. So the best example for us is there's somebody who's given very significant amounts of money to the hospital sector, and the head of the hospital foundation went to see the benefactor and said, you've given very generously. But we know these folks at PearTree, and maybe you could even give more, because it's like any other commodity. If it's cheaper if it costs you 10 cents to give away $1, you might give away more if you're otherwise taxable and generous than if it costs you 50 cents.
Sure.
So we commoditize donations, and the benefactor looked at him and said, "How do you think I'm giving you all the money I'm giving you now? I've been using PearTree for years because it's coming through his personal foundation, but through his donor advised fund." So wildlife may not know that they're the benefactor of a mining share. More likely than not, they haven't. I don't think we've had any environmental group with accounts with us, because the charities open the accounts because they're selling shares. We're arranging for them to sell the shares, that have ever said no to a mining share. Oil and gas, yes, but that's no longer the case.
But not mining.
But not mining, never.
Wow, that's fantastic.
Yeah.
It's interesting.
Look, I got very lucky. I mean, nobody 17 years ago, more or less, thought that the government would continue to support it. They have. They see us as an extension of public policy, not as a loophole. And nobody, frankly, thought we had the legs to continue on in the business. And here we are, 17 years later, doing 43 people. I think our head count is 43. We're grooming next generation. We're working hard on succession, and we're benefiting both the charitable community and the northern communities. And there's a lot of satisfaction in that.
There must be. I mean, you've had a profound impact on the mining space and the communities that you're mentioning. It's fascinating. So you pioneered this whole thing. You pioneered this concept of, of finding this sort of, not loophole, but finding this way of maximizing, the tax incentives, and joining this up with this sort of mining flow through space. Now, were you, like you mentioned, you had no idea about flow through? No. Didn't enter your vernacular until like 2007 or prior to that?
Yeah, 2006, the law changed.
Right.
Everybody in the anybody who had been a volunteer or who had been in the tax community saw that the elimination of capital gains tax on the donation of a publicly listed securities would be a benefit to charity, and in fact, it was. I mean, that change alone has added hundreds of billions of dollars of accretive donations. I mean, if you look, there's one person in 2006 who was about to give $10 million to one of the University Avenue hospitals. He called them up and said, "Don't cash the check." And 3 weeks later, donated $25 million of low basis shares. His $10 million turned into $25.
Wow!
And that's Don Johnson's work. He was not the guy from Miami Vice, the guy from Bank of America. He spent, I think, 8 years largely on his own, lobbying the government to make this change. It was a U.S. It's a U.S. Policy that's gone back a long time, and he had all the evidence in the world that the policy is effective.
Now, have you ever gone back since the inception of all this and figured out, collectively, how much how much money you guys have injected into the mining space?
We're over $3 billion. PearTree is.
Wow. That's fantastic.
Yeah, it sounds like a lot. Doesn't seem like it somehow over the years, but it's a lot. Yeah.
It's a lot.
It's more that the last 3 years is half of that, right? I mean, there was a long time when it was really tough slogging. You know, I'd go out to a charity and go, "We have rulings, right? We can reduce the cost of giving by more than half," and they would say, "Yeah, it's too good to be true. It's got to be fake." And the issuers took a long time to get their heads around it, and the intermediaries, you know, took a bit of time as well. But you know, we get paid by our clients, so when an issuer retains one of the banks to raise money for it, they're getting paid. You know, the bank's getting paid. We don't interfere with that. We are totally paid for by our client, like any other fund manager. Say, it's the capital that pays pays our fees. So yeah, we've had great. I think we've been fortunate that we've been able to continue on growing year over year. But I think we do more in a month now than we did in the first 4 years of the business.
Wow. Yeah. I really hope that people write their MPs.
Or call their MPs.
Or call their MPs.
See their MPs.
Yeah, or whatever, you know. Just is there a petition or anything you guys have put together?
There is letter writing. We've got that on the website. There are lots of seminars. But, you know, it's for the philanthropic side of the business. Anybody listening in who's otherwise generous, where we're seeing the most traction is call your accountant now, because the AMT rules are now you can now do the calculation. Mm-hmm. And take a look at what the impact will be for next year. And I think the greatest impact is when somebody walks into the office of an MP and says to her, or the guy, whatever, you know, this year I gave $800,000 to charity. I just ran the numbers. Next year it's 400, or not 400, it's 600, and it's all going to the local hospital. So are you going to top up the 200 that I'm not going to get, because I'm not giving away 100-cent dollars? So is the federal government prepared to bridge that gap? Because I'm not giving it, I'm keeping my money. You know, the AMT rules are a disincentive for people to give away money. Does that make any sense to anyone? On the mining side, it's the same thing. I mean, the Northern Caucasus should be like under constant attack. And I think they are now. I think people are starting to reach out saying, you know, this is not good. And the reality is, because it's a tailored, it's nuanced. Every taxpayer over $173,000 a year will have a different result depending upon the very specifics. Do you get income from property or dividends, and what kind of dividends? And you know, is it all T4 income? And so you have to run the calculation. Mm-hmm. We have 3 people on staff that do nothing, not nothing, but largely they spend their days doing AMT calculations. So we know the impacts. We do more AMT calculations per year than most accounting firms. Specifically for people who say, I'm earning X amount of dollars, right? I want to give away as much as I can without hitting where I can't take advantage of the deductions and credits anymore. And so we'll run that number for them. We do it all the time.
It's fascinating. I wonder, what do you think the fallout's going to be next year or in years to come vis-a-vis the effect that this will have on the Canadian venture capital space, or I guess the junior mining space? Largely the same thing.
Look, it can't be good. Can I quantify it? I can't. I can just tell you that the group of our investors, our donors, will require, you know, will buy all other factors being equal, will be able to buy a third less with the same income. That said, other factors being equal, which means the premiums will have to come down, mm-hmm. right? Or the delta, the spread between the subscription amount and the end price will come down, which means there's less wiggle, which means there's less deal flow, because a banker can't then offer a 30% premium to market and a 15% discount. They'll have to tighten those parameters through to the point where they may not be able to bridge that valuation gap. But they will come down. So there'll be less deal flow next year, I think, absent anything else. I mean, you know, you never know what happens as you come into the year, whether it's going to be a very busy year or not. But you know, we again, our this year, surprisingly, in spite of the bad market, we are over 500 million. So
that's
it's a good. Yeah.
What do you think's going to happen with the market, or do you follow that much?
Oh God, who knows?
Yeah.
You know, it's like a donor calls. I want to donate later in the year. I go, can you just? And we say, you can't time the market. How do we know? You don't know.
Sorry.
And even if the market's up for gold, it has been. The juniors aren't benefiting from that. Like there's no investment in very little investment in junior mining.
Yeah, it looks like the venture is pretty much at an all-time low, I think.
Pretty much.
We've looked at it and ad nauseum, and yeah, it looks like this is an all-time, especially if you correct for all the variety of things. This is the lowest it's ever been.
You know, about a year ago, and so the numbers are probably worse now. If you look at all the other exchanges, the TS, I mean, even the TSX, but if you look at the U.S. exchanges as opposed to the venture, the home of the mining industry, in the previous 10 years, they've been pretty robust years, globally. The venture exchange is down 64% in 10 years.
Oh, it's horrible, yeah.
And when you think of it, flow through, if you just buy a flow through share and you take advantage of all the deductions without selling it, it's a risk adjustment down to about 35, 40 cents. So the flow through regime, in some respects, simply risk adjusts it. The issue then is you have to pay a capital gain when you sell it. But even then, it should be a greater enabler. In terms of I think you asked a question earlier about flow through funds and the charity piece. Mm-hmm. So until we came along, those who got the flow-through deductions took the economic risk, and that's what the flow-through fund is, right? And so I know the funds have raised a lot less this year because their performance has been off.
Yeah.
In the charity space, the economic risk is taken by that end buyer, which is typically not retail but smart money. And so the smart money investor, how smart are they? They've lost money probably even on an adjusted basis. Even buying from us, but. It's not a retail. What we did is we basically institutionalized investment into the junior space. So it may be that the flow-through funds, assuming that they do well this year, although I don't see how, but if they were to do well this year, they won't be the impact on these AMT rules won't be as great because their minimum subscription is $2,500. So they're hitting folks, or their market remains retail. And the AMT start point is income of net income of $173,000.
Now, can those traditional flow through fund subscribers, can they roll those funds in? Can they roll those funds into a charity as well?
No. Oh yeah, no, let me change that. Yes, but not until they're liquid. So a flow through limited partnership will roll into a mutual fund 6 months later, say.
Yeah.
At that point, they could donate the unit. And in fact, if they've done well economically, that's exactly what they should do if they're otherwise generous.
Mm-hmm. And do they do that? Do you think they do that quite a bit?
I think they do. Yeah.
Okay. Because that could impact it as well. I mean, I don't think.
Yeah. I'm not sure. I think generally, anybody who wants to donate to charity using flow through generally will come to us or some of the others.
Come to charity first. Yeah.
I would think so.
Yeah. Okay.
Yeah. I mean, that wasn't necessarily the case 15 years ago, but 15 years later, I think most folks in the community know about this approach, and the bigger accounting and law firms, the national firms, certainly know all about this approach.
Okay, so the charities are going to take a hit. The mining and resource sector is going to take a hit. Oil and gas already took the hit, but it's still going to exist.
Oh yeah,
it's still going to be available.
It'll exist. It'll continue on. It's just to allay everybody's fears. The people will still be giving the charity. They'll be giving less in this format.
Right. Or the premiums may be adjusted?
And the premiums may come down. But even so, although the format or the if you look at the numbers, is the impact is the single largest impact is on the premium delta, like the split between the subscription and the end price. It has to come down a lot to adjust for these changes. So they won't come down as much. You will not see a premium drop from a 60% premium to a 15% premium to equalize. It's way too much. So the other side of it is the cost of giving will go up, so people will give less, which means there'll be fewer subscribers as well. Yeah, we're in for a time of some turmoil, I think, in the market, and we'll see. And certain turmoil is probably too strong a word. I think uncertainty is probably the better word.
Like I could sort of see, and I hate to paint a positive onto it, but I could sort of see some advantages in some way of maybe, like I know that a lot of big names, for instance, when they do these big, you mentioned Cisco, let's say, they do like a $60 million bot deal or a $50 million bot deal on a charitable flow, thing. They'll walk in with a few marquee shareholders, let's say, that are willing to take a piece of the back end, if not most of it. We have also seen a lot of that back end being filled up by hedge funds, things like this that like to clip that, maybe that delta, get into these deals, like sponge up some of that back end paper.
I mean, there's always going to be some fast money coming into these deals, but generally the back end buyers, because the issuers are smart enough to say, especially when dealing with a bank, we want to see who's buying our shares.
We want to direct it.
Yeah. So generally, you're right. There are some lead orders always, but really the question is, even for a Cisco, the discount to market was more than 10%, with in a liquid $1.5 billion market cap company.
Yeah, they'll take the funds at a premium price, discount to market's 10-11%, whatever. Let's say, but typically they do trade down to that back end price.
Some hold up better than others, but they will trade down. The OSC is actually looking at that. I think there are rules coming about that basically say you can't short stock, you can't be selling. You can't own shares at $1 knowing you'll be buying them back and you're buying replacement shares at 85 cents and on a 3-week close.
Okay, that'll be interesting to see if
they're actually. Oh no, they're bringing that in. I mean, they're not just relative to what we do, but generally they're clamping down. Right, their policy is to address that the shorting of shares during the period when a deal's announced and they know that the shares are being issued at a lower price.
Got it.
Yeah, there's actually an enforcement action right now by the OSC against one of the Bay Street firms.
Oh, is that right? Eh?
Yep.
Really? Mm-hmm. That's interesting.
In the marijuana space, not in the mining space.
Fair enough though. But I think it's coming. Like I know mining has been complaining a lot about it. I had Terry Lynch on here. He's got the Save Canadian mining campaign, talking about short selling, things like that. And I've certainly experienced some of this myself in the space vis-a-vis, doing larger deals and then having a portion of those deals allocated to funds that I otherwise would have likely not wanted them to get, and having that happen in the stock.
Yeah.
So, that can be rather unfortunate. But I know that's not up to you guys, let's say.
No,
it's usually the bankers.
It's not. It's the bankers and the issuers. I mean, the real negotiation, all we provide is a tax arbitrage.
That's right.
If the delta, that spread between the subscription and the end price, is 50%, 1.5. If the shares are trading at $1, I'm totally indifferent whether our subscribers buy at $1.50 and sell at the current market price of $1.
Sure.
Or if we buy at $1, no premium to market, and sell at whatever the math is, 66.5 cents. Right? Totally indifferent. Normally, the negotiation, the issuer says, I want a 25% premium, and the end buyer say, I want a 12, or whatever those numbers. However, as long as you take the issue price divided by 1.5, whatever that end price is, that's what will work for a donor subscriber. Those spreads will come in, and so you'll see less activity. But now, I think certainly on the deals that we've seen and participated in terms of who the end buyers are, I think we're seeing a lot more transparency and a lot more insistence by issuers as to who the end buyers are.
Yeah.
Because I know we've seen issues that were bought deal where the assumption was X co was coming in the back end, and there's been a delay in the closing because they've wanted to swap out one investor for another. We've actually seen that pretty recently. So it's a good news part of that's a good thing.
I think that's a good thing.
And more transparency is good.
I think more transparency is good, and I think these are some of the things that end up getting. I mean, like anything, it can get abused, right? Like anything, there's going to be grifters in there that can take advantage of the situation. But by and large, this has been a force for good in the industry, and definitely supported a lot of exploration spending in a lot of communities, like you said.
Absolutely, yeah. Everybody's doing a good job in this. It's great.
Good. So, what's next for PearTree? I mean, just more of the same next year?
It's boring. Just more of the same.
More of the same.
More of the same. It's like, look at, as big as we are, it's really not a scalable, it's like in a great year, flow through's $1.5 billion, maybe $1.2 billion. In a lousy year, it'll be $900 million. We're a big chunk of it.
Yep.
But it's not something that's, that's like, an investment in a platform that could be scaled up. So we're just gonna, again, we're building succession, and hopefully, I think it just, for us, it's just getting the 40-year-olds into the seats and sailing off into the sunset.
Great. Well, I hope that first of all, I hope that people earning enough capital can look at this as a way of mitigating tax, and also, doing good things and spreading their funds into the charity space, and leveraging this kind of method to amplify that and to get a better deal, I guess.
No, look at again from the subscriber donor perspective. If you're generous and you're taxable, you're going to give more. And to their credit, everybody does. Absolutely. I mean, this is, in the thousands of our donors, no one says, I used to give away $100,000. I still give away $100,000. That's very generous. It's like top 1% in the country. It used to cost me 50 cents. It now costs me 10 cents. Great. I'm keeping the difference. That's not the discussion. The discussion invariably is, I've been giving away 100. How much more can I give away?
Right.
And for lay leadership in the charities, it's the same thing. It's like, thank you for your very generous $50,000 donation. If we can show you how to give us 100 for less after tax, are you interested? On the issuer side, on the mining side, separating those two values allows a fund in Australia to buy into an early exploration play in Quebec. It's very cool when you think. I mean, it's it's with a tax value being reflected in the spread between the discount to market.
Right. Yeah, it allows them to get a toehold.
Earlier this year we did a company called Sayona. Right? It's lithium again, Quebec. It was $50 million. Canadian subscribers paid $50, donated to charity, accessed the tax value. That's $50 million on the other side of that P&L. It's $50 million of direct jobs with payroll tax on $50 million.
Totally.
Right? Yep. HST on
real money.
It's real money. Not all jobs, obviously, but diesel and HST and food and HST. But the Australians ended up, I think we sold that deal for $32 million. That was the spread between the subscription and the M price.
Yep.
So we have Australian subscribers coming up with $32 million to fund $50 million in Quebec. And from the Australians' perspective, that's $32 million is leveraged up to 50 in direct activity in the ground. It's a remarkable enabler.
Yeah, fantastic.
Yeah,
and it's great for the companies. It's great for the back end and buyers to get it at a discount. It's great for the companies to get it to finance at a premium and minimize dilution, maximize what they can do, and ultimately what they're doing is exploring. They're spending money. That's what they're doing.
And maybe even though it's venture capital at its riskiest, they may actually find something.
Well, that's the only way to create value.
Yeah.
You can't create value in this space without spending money on the properties to advance them. You got to drill holes. You got to like you said, you got to pay those salaries, drill those holes,
keep the drills running.
Yeah, absolutely. That's the only way to create value. So no, it's absolutely fantastic. So domestically, do you know roughly where most of the charitable philanthropic kind of donations, what occupation pool that comes from? Is that largely?
It's actually. I mean, I can tell you from our client base, which is the majority of them. So 2/3 of our clients are owner managers. So the owner manager, typically family run business, where the parents or grandparents started the business. They do it's a successful business. They were giving away $500,000 a year. They want to give away $1 million, and that's sort of our sweet spot. And they've got good advisors, but they're not heavily tax planned. There isn't a lot of tax planning available anymore anyway. So it's not the uber wealthy. I mean, we do have uber wealthy folks who will donate through us, but it's a very small amount relative to their total philanthropy. But for us, the sweet spot for 2/3 of our market, or for our donor base, is the owner manager. The other third is C-suite executives.
Okay.
And the majority of those are either are in financial services, interestingly. So a lot are in the a lot of the C-suite in the big banks, in the investment banks.
I guess that makes sense.
I guess so.
Because I would have guessed higher salaries, like whoever gets the highest salary, and that sounds obvious. But hang on a sec. If you're in the capital markets game, then largely you're in venture capital, then maybe a lot of your gains come through capital gains. Or you run consulting services for a company and you've got a consulting contract. Whereas like I would think, people with a T4, let's say as a doctor or a lawyer or for a large firm, or you work for a big bank and you're an executive at a big bank and you've got a big paycheck. Those people.
And single events. C-suite executive retires after 20 years of the firm, right, and gets a payout.
Got it.
And it's all taxable at full rates.
All taxable at full rates,
right?
Yeah.
I mean, people who run PE funds are great clients of ours.
Gotcha.
Plus, a lot of people are remarkably generous. When I think of the bad press that wealthy people often get, it's all about the tax value and the naming rights, and for the most part, it just isn't true. I mean, we know of a number of families. One in particular, their global operations are set up through one of the low tax jurisdictions. I mean, Barbados is the big one for Canadians, but may not have been Barbados.
Sure.
They give away $25 million a year, about $2 million a year through us. The rest of it is 98-cent dollars. They're bringing money in from the low tax jurisdiction where they've only paid 2% tax, and they're giving it away. Right? That's astounding. I mean, they're usually generous, and yet, the perception is that those folks are, ego-driven or tax-driven, and it just ain't the case. And I've got a lot of respect for people who are giving away a lot of money.
Yeah, I've got a lot of respect for them, and I've got a lot of respect for the venture capitalists too.
Yeah.
People that are taking the shots and investing in startups. And
taking risk is
taking risk. It's a necessary step, especially in this economy.
I was at one of the AME conventions just after COVID in BC. And I had a chance to say something to the group. I don't know, we're talking about tax or something, whatever it was. And I suggested that everybody in the room was all suffered from like delusional optimism. Like it's like you are delusional. Like the thought that you're going to be successful drilling holes in the middle of nowhere while swatting black flies. Seriously,
it's like a sick in the head. Yeah.
Yeah, but you know what? Any of those guys that get the annual awards, listen to what they say. They all say the same thing. They generally say, first of all, they're in their 80s. They go, I can't believe they paid me to go camping. Can't believe it. They paid me to go camping.
Yeah.
Right. So I mean, you have to have love for the outdoors and love for nature, and and just be delusional about the likelihood of success. Some of them are obviously successful. That's why people buy lottery tickets, I guess.
Yeah. Well. Yeah. I mean, we're certainly guilty of it. I think, we're bitten by the bug, and this is definitely a shop that likes to invest in things and likes to take those sorts of chances. But certainly the success that we've had as individuals and et cetera have come out of such lottery tickets being pulled,
And the thought and the fact, I mean, when you look at who employs people in the North and the quality of life in the North as a result, and the quality of life augmented by the mining industry in indigenous communities, it's astounding. I mean, it's the mining industry.
It's fascinating.
It's all about mining.
It's really interesting, and I don't think it gets enough press. And you're dead on, because when you go to these places, I mean, it's just unbelievable. It's unbelievable.
It's a different world
to see them go. Like, I mean, imagine Canadian Malartic. See Canadian Malartic, before and after Cisco.
Yeah.
I don't need to have been there to imagine exactly what that looked like.
They relocated 600 houses for Canadian Malartic.
Yeah, it's insane.
Yeah, it's insane.
And I think those people are broadly. I remember there was like one holdout person, and then they got him figured out.
Yeah.
And then, but in the end, I bet you if you go there today, the schools, the people, all the stuff, like I'm sure they're super happy with.
And Northern sovereignty.
Yeah, absolutely. Yeah. We did. We're obviously with Newfound Gold. Gander has been an exceptional place for us, and we're right outside of Gander. And we've spent a ton of money exploring out there. And it's just unbelievable to see all of the small businesses, the service people, the restaurant owners, everybody, the whole community, the hoteliers, everyone who's got something going on in town. And they're all loving it because it's making jobs. It's bringing so much prosperity to the area. The schools, everything is uplifted.
Yes.
I mean, hundreds and hundreds of jobs. And we're talking about a community that's not that big, maybe 15,000. I mean, hundreds of jobs is a big deal. And then tangentially, all of the different, the success that's going on. It's so cool to see.
Yeah, it is. It's very cool to see. But, that there's also a perception problem in terms of flow through when you talk to politicians, especially. Go, it's a gift to the rich, right? They get yet another deduction.
Yeah.
And there's a real uphill battle for us to say, wait a minute, this is holistically my deduction is somebody else's inclusion. Mm-hmm. And if you and I sat down together and hired, a drilling rig and some geos and pay that way, shouldn't we get the deduction? That's all that a flow-through share is. When the law changed in 2011, excuse me, we thought that we in some respects we thought it would be the end of the business, and it took us 5 months to whiteboard the workaround and go back to the CRA and Revenue Quebec. Interestingly, CRA and Revenue Quebec said it wasn't us; it was finance. We had nothing to do with this change. We're quite happy with the original iteration. Mm-hmm. But we commissioned a report by Deloitte, and we picked Deloitte because they represent or they audit most of the big drilling companies, Major Drilling and the others. And we said, could you go to the drilling companies and say, you took in this issue, you did the drilling program, $10 million drilling program for this issuer who raised money on flow through. So we know the deduction side. We know exactly how much the fiscal authority lost on the deduction side. Can you tell us what the fiscal authority got back on the inclusion side? Mm-hmm. And Deloitte did a remarkably great job, but unfortunately they could only look at a third of the expenses because the big drilling companies said we use subcontractors. And so we can't, the helicopter crew, we don't know what, we have no line of sight into the payroll recoupment or whatever. But only looking at a third of the deductions, the cost was down around 14 cents per dollar of exploration. That's only looking at a third. The reality is in the flow-through regime is that the bureaucrats, and there's no finance department anywhere, other than Quebec, that likes boutique tax deductions. Mm. Right? They just think it's just it's hard to administer. Ideally, there should be no deductions, and that's what's driving this AMT change as well. No deductions and lower tax rates. Like we're going to see lower tax rates. So we actually did that study and showed it to finance. And again, they just looked at it and went, yeah, okay. Right? Stephen Harper is famous for an argument he had with finance. We brought in the tax credit for home renovation, mm-hmm. which basically would get rid of the gray economy, right? No longer would the plumber say, I'll take cash. Right. Because you're going to say, I want my tax credit. I'll pay the HST. What's the difference? I'm going to write it off.
Absolutely.
He, in one of his books or whatever, said he had to say, I'm the prime minister, you're doing this. Like, he got into a very heated debate. They just don't like boutique, no finance department likes these small tax deduction, these small incentives. And yet, so the flow-through regime is often, when you look at it, there was some horrible press about 5-6 years ago coming out of the University of Calgary saying, $4 billion, I still remember it, $4 billion of bad investment. So, this is an antiquated system, $4 billion lost. And I'm thinking, since when does any academic care that high net worth people are losing money? And I looked at it as $4 billion of jobs. So what if high net worth people lost money? Yeah. Right? And so they were actually, commenting negatively on the flow-through regime as just a stupid thing, and it's not.
No, it's not. Right. I think an interesting point. So I was listening to this as you were coming in. So the universal health care, did you see this?
No.
So they're trying to pass a bill now. Or not universal health care, sorry, universal basic income.
Okay.
So there's this whole thing about universal basic income. They want to roll out a universal basic income to deal with the growing issues Canadians are having. There's food scarcity. There's people that have there's the homelessness, the expenses, the housing, the grocery costs, all these sorts of things that are ramping up and a growing number of people going to food banks. I think it's something like
it's horrible.
8 million Canadians, something like this.
1 in 10 in Toronto currently have to go to has to bridge food insecurity. Absolutely.
Well, 1 in 4 households with young children, it's as high as that nationwide.
Yeah,
are technically food insecure and going to food banks. So it's pretty appalling, the numbers. And so I could see why the push for something like a universal basic income. But then, again, it's almost sort of the counterpoint of what you're saying. Or it's sort of a counterpoint at looking at a similar problem. So rather than looking at this and saying, well, the rich are getting a tax break, and so we've got to cut these tax breaks and try to re-incentivize and put money into the pockets of whatever. We can look at this and say, well, because of the charitable flow through, or the flow through and charitable flow through and all this, as you're saying, a handsome amount of money goes to these rural areas that people are, I guess, in need of this type of money disproportionately compared to I would say,
I would think so.
the metropolitan centers. And so there's sort of some redistribution that's going on there, right? That's facilitated by this. Now, if we look at like something like just elevating taxes and distributing universal basic income, now we're disincentivizing. It's just gonna be more taxes, higher taxes on people as a whole. I wonder if there's any sort of thought. It'd be interesting to see both of these issues being debated at the same time in the public square, because I don't think they're that unrelated. I think they're kind of looking at the same problem from different sides of it.
I suppose. I'm not sure I have a lot to comment on that. I mean, basically, I think it's unfortunate that in formulating the new regulations that are coming in next year, the new AMT rules, that they didn't actually push through a bunch of what ifs. We did and I think some of those what ifs are the food banks will be hurt. Absolutely. Every charity will be hurt.
Yeah.
With less flow through, less jobs in the north. Yeah. I mean, the two are interrelated at that level. We did a series of seminars or webinars starting about a month after the budget in the spring. The second one included somebody that had been the general director of tax policy for Department of Finance, a guy named Brian Ernewine, who actually walked through the policy thinking. I mean, he's now retired. He spent a year retired and thinking, "What, this is silly," and he ended up joining one of the big accounting firms. So they were kind enough to make him. He got through compliance. Said, "Yes, I'll speak on this." And his view was even his view, and he was very doctrinaire about his policy decisions going back for 35 years, was that these rules are just wrong, and it will hurt our economy and will hurt those who are most vulnerable, and it's unfortunate. In terms of when there might be a turnaround or a re-review, I think the real hit will probably be the spring of 2025.
Yeah.
Because a lot of people are not mindful of or cognizant of these changes in tax law. I mean, who would be unless you're living this as part of your business?
Right.
And so they'll trundle off having made their donation next year, and then their accountant in the spring will say, you can only use a third of your donation receipt. It's not just flow through; it's cash. I mean, you're only and so. Unfortunately, you've got too many other deductions, and you can't. And then when the fundraiser calls from the food bank in the spring of 25 and says, we could really use your help, there's an increased likelihood that person is going to say, you know what, I gave you $1, but I can only give you 65 cents now because I couldn't even make use of the dollar deduction. And I think that's when there'll be the sort of the groundswell of public opinion.
Yeah, it's sort of like that lagging fact, like all those lagging things that happen.
Yeah.
Those aftershocks.
I guess just in time for the next election.
Right.
I'm sorry, did I say that out loud?
No, that's right.
This is being edited, right?
That's okay. Yeah, that's okay. No, I'm with you. I think it's time for a change there. I think, it's interesting. I think when we're talking about universal basic incomes, we're talking about, making cuts to incentives and stuff that fuel very important parts of our economy. Sectors that fuel important parts of our economy. I think there's a lot of critical mistakes that are really hard to put the genie back in the bottle in. So we'll see. At least with this one, as you said, at almost the turn of a hat, they could change, these incentives very quickly.
Yeah, they could,
and you have and manifest some real immediate change.
Oh, it's easy. I mean,
Yeah.
Easy is not the right word, but it is immediate because
It is
again, the brilliance of the flow through regime is
It's end to end. It's peer to peer.
But it's also exactly it's here are the rules, change the rules, and the public market will respond, and and the response is instant, and there's no infrastructure, there's no bureaucrat looking at it up front, there's no lag. I mean, the 2022. Mineral exploration tax credit that was introduced, the critical one, is remarkable in the impact it had. So in some respects, uncanny political timing, and the market was hot.
Yeah, it's the same. You slash capital gains. You're going to get a massive spike instantly in people willing to gamble.
Yeah.
To gamble on small business.
Absolutely.
Yeah, great.
But it doesn't sound good, does it? We're taxing the rich and taxing the rich. So
yeah, well, that's the world we live in, right? And unfortunately, that's every society is history repeating itself. Every society struggled with this.
Yep.
And so I don't think this is any different. I think we're seeing something that was very akin to what we've seen in the history at the turn of the century, in the 19th century. Socialism, communism, explosion in the Soviet Union. These ideas proliferated for a reason, right? And a lot of them were because look at it's like that ivory tower thing.
I'm sorry. Are you calling the current government socialist?
Yeah, 100%.
Okay.
Yeah, I think they would call themselves that. In fact, I think Stefan Guibault prided himself in being a socialist.
Yeah, I was actually going to say, are you characterizing this government as socialist dictatorship? But obviously, that's an improper question.
Yeah, the dictatorship. I think the dictator.
Because that's what you cited. You only cited examples of dictatorships. I'm just curious as to.
Yeah, well, it's interesting. I've just finished reading Alexander Solzhenitsyn's book called The Communist Manifesto, and it's like a super huge long read.
Yeah,
it's appalling. But I can't help but to listen to it and go, "Oh my God," Like a lot of these ideas make sense. I could see them in today.
Yeah.
Right. So hopefully we don't go down that path, and hopefully we continue to invigorate investors and invigorate and stimulate the economy through other means than tax.
Great mantra. I should get that embroidered on a
on a sweater.
On a sweater or something.
Yeah, Christmas sweater.
Yeah. Or as one of our clients said, and I think when the top marginal tax rate is 53.5%, but if you have a small business, it's over 60% to get money out into your personal hands.
Sure.
And he said he'd never thought he was going to be a minority shareholder in his own life.
Yeah.
Yeah.
Yeah. Well,
so
here we are.
Ron. We're all minority shareholders.
We are, but that's hopefully one can wish that we correct course and it's not too late. But anyway, well, thank you very, very much for coming in. It's been a great chat. Thanks. Yeah, thanks for educating us and our audience on charitable flow. Yeah. Congratulations! Thank you very much again for everything you've done for the industry. And I think you should be inducted in the Canadian Mining Hall of Fame at some point here.
Yeah, I don't like camping.
All right, man. Well, thank you very much.
Thanks.
Cheers.
Bye now.
Bye.